All right, welcome back to this week's breakout watch list from September 18th to the 22nd. I know last week ended on a bad note, and while I will be cautious going into next week, I still found a number of quality setups that I wanted to share today. So, in today's video, we'll be covering the top 10 swing trading setups from the long side. Each of these stocks either have strong fundamentals, strong technicals, or volume patterns that lead to uptrends. But before we get started with the stocks, this video is sponsored by MarketSmith, which is the trading research platform that we're going to be using to break down each of the setups. And I can't say just yet, but there's going to be a great MarketSmith deal going on next week, so make sure you follow my Twitter account for all the details. Now back to the stocks, here are the 10 that we'll be covering in today's video. Each of these stocks have been showing relative strength while the market's been in the corrective phase. The first stock that we'll cover is Abercrombie & Fitch, ANF, and very similar to Crocs, this kind of fell out of favor and is now back popular again. It's in a strong group, 40th out of 197, that's an A- group strength rating, 98 overall composite with a 99 individual relative strength rating, all numbers that indicate it's a stock that you need to have on your watch list. I started this on my watch list on the 24th when it had its first earnings gap up 31% on 825% the average daily volume. Very nice trending above the 8-day EMA before quick gap down through the 21 and then followed that up with a gap up back through the 8 and 21. This kind of action where the street gets caught off guard, everything looks really bad, and then we pop back over those moving averages is exactly how I bought it on Thursday, where we started to pull back through the 8-day EMA, undercut the HVC, but then the next day we gapped up above the high volume close, just the closing price of this last earnings that reported up 467%, sales up 16%, after-tax profit margins up 6%. We gapped back above that closing range. I bought it right at the open. From there, basically didn't show me much profit, maybe 0.2%, whatever. But the next day, very strong action, up 2.2%, reclaiming the 8-day EMA, closing at the high of the day. This is one where if we see market pressure come in early on in the week, just holding this $50 area along with the 21 EMA would be a really nice look. If we can hold the HVC, that would be 50.86. That would be even better. But I'm not putting too much pressure on this stock to hold up if the market comes under true pressure. Next, we have a stock that's been on the watch list for a couple weeks. This is APP. Computer software, enterprises, 43rd strongest group out of 197. There's still a lot of stocks within that group, that software group, that's been holding up great while the market's in that corrective phase. This is one, we've talked about this I think last week as well, from $9 all the way up to $43. Since then, we pulled back into the 8-day EMA on below average volume. We did undercut the 8-day on Thursday, similar to ANF, before gapping up, similar to ANF, closing right near the high of the day. And then Friday, very strong action, up 0.5% while the indexes were down, I want to say 1.8%. Again, Friday closing at the high of the day as well. Really good volume with the gap up and strong close on Thursday. So even as the market's correcting, this is a stock that's continuing to fight that downtrend. If the market goes into further correction, I still want to see this hold the 21 EMA or at least $40 as it builds out through here. Maybe we take it a little bit later in the week after a flush on Monday or Tuesday. With the market having corrective action, a lot of biotech stocks were showing up on my screens this weekend, and this is the best one that I saw. This is CRNX. Average daily volume, 1.5, $30 stock, so it's not very thinly traded. It did have a nice gap up. This was up, 63% on 2,500% the average daily volume, but didn't close very high in the range. But the next day, we had a gap up and a rally closing back over $30. This was on 920% the average daily volume, up 17%, so really nice follow through from there. Since then, we've just been tightening inside day, inside day, inside day. If we go to a 15-minute candle, you can see just how tight this price action has been. So with this, just a downtrend line could work through a breakout. Ideally, we kind of shake out this 29 or 28.8 area before taking that out. Just so we take out all the weaker buyers in here, shake them out, and then as it pops through, they need to buy back. So I'll be looking for a break over that downtrend line as a potential entry point. But being a biotech stock, I'm not going to size this up very much. I have a rule, no more than 15% max if I'm holding overnight. Intraday, I might size it up a little bit more and try to shed the position into strength, but biotechs do have that overnight gap down risk. I don't want to be risking any more than 15% of my account. Typically 10% is my max. Next we have FN, and I know this was on the watch list last week as well. Still acting perfectly fine. We had this gap up on earnings. Earnings were up 11%, sales up 12%, after-tax profit margins up 10%. You can see nice 4 quarters of not earnings acceleration, but positive earnings growth, positive sales growth, and profit margin improvement. On that earnings day, the stock was up 31%. 630% the average daily volume, strong closing range, nice day two as it comes through 160. And this was kind of fighting that market pullback. From there, we did have a nice rally in the market a couple days. I want to say it was like 6 days straight up. This stock didn't participate in that action, which is kind of a yellow flag. And then we do get a gap down, which is slightly concerning, and why I didn't want to trade it right away. I wanted to see how a pullback to the 21 EMA handled. And we did get that pullback last week on Wednesday, undercut the 21 EMA, but then closed above it. Next day, we gap up slightly, closed nicely in the daily range. And then on Friday, we closed right near the high of the day, up 0.7%. Again, as the indexes were down, I want to say 1.7, 1.8%. So nice relative strength there. You can see that uptick in the relative strength rating. This is one, if we go into more corrective action, Monday, Tuesday, just pulling back to the 21 EMA and tightening up this range would improve the trade setup. Otherwise, just a break over Friday's high, 151.41, potential entry point. Next up, we have Google, and since NVIDIA has seen some selling pressure lately, I really think this is the liquid leader in the market. Just put in a new 52-week high on Thursday before putting in an inside candle on Friday. Great relative strength. Ever since this earnings gap up, where earnings were up 17%, sales up 7%, after-tax profit margins up 24%, the relative strength rating, the relative strength line, has just been in a very strong uptrend there, which is exactly what you want to see. Now, what I'm hoping for with this setup is the market continues to distribute, continues to sell off Monday, Tuesday. If we can come into this 21 EMA, manage my risk against the 21 EMA and the low of this pullback, 134.15, that would be a really nice area to get in, because if the market's going to hold up after that pullback, this is a stock that's already showing that there are a lack of sellers present. Buying pressure is still coming into this name. So if the market is going to find its footing, this is a name that when I can manage my risk very tightly around the 21 EMA, it's more than likely going to be a good buy spot. So that's Google. Now back to the computer software, we have NTNX. I'm not sure if this was on the watch list last week, but I know I've talked about it before. Most recently had earnings up 241% year over year, sales up 28%, after-tax profit margins up 14%. Really nice move on earnings back over previous resistance here at 3370 area, and basically traded sideways as the market pulled back in, had a nice 1-2 day rally, and then eventually pulled back as the market pulled back just to the 8-day EMA, and we did so on lighter than average volume, which is exactly what you want to see. One area that I want to test against is $35. The other is the HVC, the closing price of that earnings pop. That's going to be $34.90. If we can pull into that area with more pullback action in the market and actually hold either 35 or 34.90, once you start your U-turn, that's your area to manage risk against, a nice 1-2% risk for NTNX. Next we have PDD, and this is a Chinese stock, so if you don't trade Chinese stocks, there is a little bit more risk with those. Just skip to the next one, but this is one that I wanted to cover because the weekly chart is looking really good. We did have some price action around $100. When was that? September of 2021, before a very steep correction from $100 all the way down to about $23. From there, you need a lot of time to really build out a base after an 80% drop, and that's what we've gotten, about a 2-year base here. But more recently, very nice action on the daily chart. You can see a big cup working on the handle right at 100 right now. Again, we're looking for stocks that are showing relative strength as the market is correcting, and that's exactly what PDD is doing. Massive volume up, and then we did have this gap down day, and this is really what put this on my radar. We had this gap down day, and instead of just gapping down and then collapsing with the weaker market, it gapped down, settled there at the 8-day, and then rallied right back up to $100, forming our pivot point. Really nice action on Friday, a 0.4%. Again, the indexes were down. I'm going to keep saying that, but that is a sign of relative strength and something that I focus on. So this, we don't need to overcomplicate it. Just a break over 100, then manage our risk against the low of Friday. That's 96.95, 3% risk there for PDD. Next, we have another biotech. This is REGN. This is liquid enough for me to trade. 500,000 shares traded a day at $823. This is also a biotech that has actual earnings, actual sales, actual after-tax profit margins. So while it's still risky, still a biotech, I'm still going to use my 10 to 15% max rules for position sizing. It's one that I am less worried about a really steep overnight gap down. So looking at the chart, it trades pretty choppy. This double bottom base, lots of wicks in that price action. So when we actually come up to the top of the base, right at 850, kind of get rejected at that area, we're starting to see really tight price action here. So here, here, we have a shakeout to the 21 EMA, but then relatively tight price action compared to the left side over here. This is all kind of wonky, all around. So when you see that tight price action, it's more a look of accumulation bars. And as we continue to run up, relative strength runs up. This is one that, two ways to play this. If we undercut the 21 EMA, then recapture it with like an oops reversal, maybe we gap down, then come back through that area, then we can manage our risk with whatever the low of that day is. Otherwise, just looking for a breakthrough Friday's high, 836.35 as your potential entry, and then keeping a 3 to 4% stop loss for REGN. I got two more stocks to cover, and for full disclosure, I do own them both already, but looking to add to those positions. The first one is Uber. This was my bread and butter setup, getting in the higher low 50 pop. So what we're looking for here, we pull back through the 50-day moving average. When we get a couple closes, multiple closes under the 50-day, a lot of swing traders will have above the 50-day moving average as a part of their screens, as a part of their trading rules, that they don't trade any stocks under the 50-day, even if it's just right around that area. Because of that, the higher low 50 pop is a really nice setup where if we rally up to the 50-day, put in a higher low and a really tight price action below that area, then I'm looking to get in just with a break above either a previous day's high or a previous 2 or 3 days high, nice pivot under the 50-day moving average. So by the time the price goes through the 50-day and then shows up on all the swing traders scans, I'm already in with a nice 3-4% profit, and I can manage my risk below the 8, 21, the 50-day moving average, and below the previous day's low. That's exactly how I traded it on this day, the 29th. Since then, it's been acting really well. Rallied up into, Rallied up into 47.60, pulled back to the 50-day moving average. You can see bounced right on that area on the 7th of September. Put in a nice unfilled gap up, unfilled on a closing basis, I should say. Unfilled gap up, running into another unfilled gap down. So at this point, I did take a little bit into profit. I want to say for 13% or so. Added it right back on this day as we came back into this zone and bounced through the 8-day EMA. Since then, the market's been correcting a little bit more. This closed right on the 8-day EMA, still below average volume through that whole area. What I'm looking for here, 21 EMA catches up. We trade this later on in the week, and hopefully we can get really tight price action around the 21 EMA, and then we can size up a little bit more. Right now, this is an 18% position for me. I would have no problem getting it to 25% because it is acting so well, and I did get my initial buy point very nice under the 50-day moving average, and now my stop is below the 50-day, but in profit for Uber. And finally, we have VRT, very similar to APP and ANF. This is a stock that started to look bad on Wednesday, undercut the 21 EMA, closed right back on it with a relatively strong closing range, and then we got that gap up on Thursday. That's where I bought the stock on Thursday, and then I added to it on Friday at the end of the day just because it had a stronger closing range, only down 0.7%, while the market indexes were down much worse. One thing I want to point out with this is fund ownership has been increasing from 425 to 440, then 558 most recently. And as you can see, very strong accumulation bars here, 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 here. And earnings up 360%, sales up 24%, after-tax profit margins up 10%. So fundamentally strong. We're seeing accumulation bars. If the market can find its footing at all, this is a stock that I want to force myself into. And if I get stopped out for 3% a couple times, that'll be fine, because when the market does find its footing, this is a stock that can run. And that's going to be the breakout watch list for the upcoming week. I hope you guys enjoyed the video, and I'll see you in the next one.